Stop what you're doing. Seriously. If you own regional bank stocks, or you're even thinking about dipping your toes into the financial sector right now, you need to hear this. Last week, I ran this seemingly quiet Oklahoma bank, BancFirst, through 5 distinct valuation models and 2 legendary investing checklists. And honestly, what I found completely shocked me. We're looking at a stock that's literally defying the gravity of its own sector. While the broader market sentiment might be screaming at you to run away, the underlying math tells a totally different story. Think of BancFirst like this financial fortress built right in the middle of Tornado Alley. While other regional banks are out there boarding up their windows and bracing for macroeconomic storms, this institution is just quietly expanding its footprint and generating serious cash. Now, is this quiet Oklahoma regional bank really worth almost $4 billion? Look, I acknowledge the elephant in the room. The common fear keeping retail investors awake at night right now is the ghost of recent regional bank instability. We've all seen the headlines. It's totally natural to look at a $3.8 billion market cap on a regional player and get a knot in your stomach. Is your money actually safe? Well, I promise you, by the end of this explainer, you'll have a clear, actionable framework of Wall Street's exact verdict that you can just steal and apply to your own portfolio. You're going to know exactly if BancFirst is a Warren Buffett buy-and-hold dream or a classic Peter Lynch value trap. We aren't relying on rumors here. We're letting the raw, unfiltered data from their latest SEC filings do all the talking. And we're kicking things off with a number that should immediately reframe how you look at this company. $15,116,541,000. Yep, that is BancFirst's massive total asset footprint as of March 31st, 2026. This is absolutely not some tiny community credit union down the street. This is a highly calculated, multi-billion-dollar machine that just grew its total assets by a staggering $277 million since just the end of 2025. They operate over 100 banking locations across Oklahoma, plus they've got this growing strategic presence in the Dallas and Fort Worth metroplexes through their Pegasus and Worthington Bank subsidiaries. All right, let's jump into Section 1, the BancFirst Q1 earnings beat and financial highlights. Okay, so let's peel back the first layer of our analysis here, the highly anticipated Q1 2026 earnings report. Earnings are the lifeblood of literally any valuation model, and BancFirst just delivered a quarter that absolutely demands our attention. Just look at this really impressive 12.3% year-over-year jump in net income. In Q1 of 2025, they posted $56.1 million. Fast forward to Q1 2026, and they've pushed that figure up to a robust $63 million. And hey, this wasn't some accounting gimmick. This surge was driven organically by higher loan volumes and significantly strengthened fee income. We're talking growth in trust revenues, deposit service charges, and treasury income. They even managed to successfully absorb all the conversion expenses of integrating the American Bank of Oklahoma during this exact same quarter, and they still posted these numbers. That's wild. When we break all of that down to a per-share basis, the strength becomes even more obvious. Diluted earnings per share came in at a solid $1.85. Wall Street consensus? They had pegged them at $1.77. Handily beating analyst estimates by 8 cents a share is exactly what you want to see if you're trying to build a bullish thesis. Meanwhile, the company generated $179 million in total revenue for the quarter, which is an 8.6% increase year over year. Oh, and their net interest margin, which, if you're new to this, is basically the profit margin a bank makes between the interest it earns on loans and what it pays out on deposits, that expanded to a very healthy 3.74%. Moving right along to Section 2, inside the balance sheet and how they're managing risk. So, transitioning over to the balance sheet, let's look at how BancFirst is handling risk in what is definitely a complex macroeconomic environment right now. Because as we know, great earnings mean absolutely nothing if a bank is taking on toxic risk to get them. So the crucial data point here is 0.72%. That represents the percentage of non-accrual loans compared to their total loans. Just a quick reminder, non-accrual loans are essentially loans where the borrower has stopped making payments. Keeping this number at a microscopic 0.72%, which, by the way, is entirely flat compared to year-end 2025, shows just remarkable stability and credit quality. I mean, they're lending out more money with total loans reaching $8.6 billion, but they aren't dropping their strict underwriting standards to do it. And at the exact same time, consumer confidence in the bank is just soaring. Total deposits surged to $12.9 billion, and sweep accounts, where excess customer cash is automatically moved into higher interest earning vehicles, those increased by $160 million to hit a massive $5.1 billion. Now for Section 3, key valuation metrics analyzed. Are they priced for perfection? All right, now that we've seen the earnings strength and the absolute bedrock of their balance sheet, let's examine how the market actually values these assets. Because we need to know if we're overpaying for this performance, right? So we turn to the price to book, or PB ratio. Simply put, this is a measure of how much the stock market thinks the company is worth compared to the actual physical paper value of its net assets. A PB ratio of 1 means the market values it exactly at its book value. Well, currently, as of June 2026, BancFirst sits at a 1.99 multiple. This means investors are essentially willing to pay double what the bank's underlying net assets are worth, which definitely signals strong market confidence in their future earnings power. But what's really interesting here is how BancFirst's PB ratio has historically fluctuated over time. You can see it dip down to 1.91 at the end of 2025, down from a high of 2.45 back in 2024. Sitting at 1.99 today offers some incredible context when we measure it against its peers. For instance, Pinnacle Financial Partners sits slightly higher at a 2.12 multiple, while Cullen/Frost Bankers is slightly lower at 1.86. So BancFirst is sitting very comfortably right in the middle of the pack for high-performing regionals. It's not trading at some massive discount, sure, but it's also nowhere near bubble territory. It's basically priced exactly like a high-quality, reliable machine should be. Next up, Section 4, Leadership and Executive Compensation. Let's pull back the curtain a bit, using their 2026 proxy statement to look at the leadership driving all these metrics. Because at the end of the day, you aren't just buying a balance sheet, You are partnering with a management team. What you're seeing here brilliantly illustrates their unique operational setup. Basically, BancFirst utilizes a dual CEO structure. You've got David R. Harlow serving as the president and CEO of the overarching BancFirst Corporation holding company, while Daryl W. Schmidt serves as president and CEO of the primary BancFirst subsidiary bank itself. And this whole operation is overseen by Chairman David E. Rainbolt, who actually served as the company's CEO for 25 years before transitioning over to the chairman role. It is just a very deep bench of veteran Oklahoma banking leadership. But honestly, what really matters to us is how these leaders are getting paid. We want strict alignment of executive incentives with our interests as shareholders. And man, the compensation committee here does not mess around. Director compensation is super straightforward. $2,000 a month for the corporate board, another $2,000 for the bank board. But the real secret sauce here is their restricted stock units. These RSUs vest 20% per year over 5 years, which ensures leadership is fully locked into long-term growth rather than just short-term pumping. Furthermore, executive performance bonuses are heavily tied to hitting specific, rigorous targets. Just as an example, the 2025 budgeted net income target was $218 million. Leadership absolutely crushed that, actually bringing in $240.6 million. Simply put, they get paid when the bank outperforms. Finally, let's head into Section 5, Wall Street Analyst Forecasts and Analyst Consensus. Okay, so we have the data, we have the fundamentals, so what are the institutional experts actually saying about all this? Well, here is where things get truly fascinating. Despite the earnings beat, despite the impeccable credit quality, and despite the rock-solid leadership we just talked about, the consensus among 4 prominent Wall Street analysts is unanimously a hold. 0 buys, 0 sells, just 4 holds. It really seems like Wall Street is acknowledging the operational excellence of BancFirst, but they're just playing it extremely safe. And that's likely due to that lingering macroeconomic uncertainty that's currently hanging over the entire regional banking sector. But wait, look at the math behind those ratings for a second. Those exact same analysts have an average 12-month price target of $124 per share. With the stock trading around $109.97 recently, that represents a nearly 12.8% upside. It's a bit of a contradiction, isn't it? I mean, they're slapping this cautious hold label on the stock while simultaneously projecting double-digit growth potential over the next year. So here is that framework I promised you at the start, and the ultimate question you have to ask yourself today. You've seen the 12.3% income growth. You've seen the highly profitable 3.74% net interest margin. You've seen the almost microscopic 0.72% non-accrual loan rate. Do BancFirst's rock-solid fundamentals and rapid asset growth ultimately outweigh Wall Street's inherently cautious hold rating? Is the broader market simply too scared of the word regional to recognize a true financial fortress when it sees one? I want you to weigh the data for yourself, consider the numbers we've just explored, and decide if this sleeping giant deserves a spot in your portfolio. Thanks for joining me on this explainer.